I'm buying 17 stocks, and in this video, you'll see both the stocks I currently own and the stocks that I want to buy and hold for a very long time. The first stock that we're going to look at here is Apple. Apple, I bought this back in 2012, $17 a share. Currently, it's $226 a share. It's over a 10-bagger for me. In this time, I also had a 100-bagger. I bought Pharmaceutical way back in the day. They sold to AbbVie for a lot of billions of dollars. That was a very quick 100-bagger. And actually, it's in the book 100 baggers as the fastest 100-bagger to ever exist, which is cool. I'm hoping that Apple happens that way too. Stock number 2 that I own, Google. Google is just a phenomenal company. Guys, they basically own the internet, and that is why I absolutely love them. To me, when I say go and search something, I don't say go and search something on the internet. I say go and Google it. And I don't say Bing. I don't say Yahoo. I don't say DuckDuckGo. I say go and Google it. Google is, it's like when I say somebody give me a Kleenex. Well, I'm asking for tissue paper. I'm not actually asking for a Kleenex. It's absolutely incredible what this company has done. Again, if we just scroll down to the financials, I love what they are able to do. Again, I think they're pretty good at capital allocation. Not as good as Apple, but I love that they don't pay this dividend. I love that they can reinvest in themselves at a pretty decent return. Now, my basis on Google is about $136. I bought this pretty recently. I'm hoping to add more shares, and there is going to be a time that we are all going to be able to buy Google at a very, very fair price. Now, I know that they're going through some antitrust suit right now. I am not letting that bother me in any way, shape, or form. And frankly, guys, when it comes to the big ones out there, Google, Apple, Meta, whatever it is, you need to be very aware that you cannot be bogged down by the governance and the lawsuits. You'll be in and out of stocks like crazy. You have to stick with these things. Don't worry about them. They're just noise. Stock number 3, Brookfield Asset Management. This is probably one that a lot of you haven't heard of. To me, it's like a holding company. My basis here is about $25 a share. I've owned it for some time. I actually found out about this company and got interested in this company from Monish Pabrai. So to me, I look at this, it does run very similar to almost a bank. And I don't necessarily love having banks in my portfolio, but this was different. Do I think they're going to suffer in some type of recession? Yeah, probably. That's probably going to happen. Why? People are going to be pulling their money out. They're going to go to cash. They're going to be worried about things. But I look at this like a company that you can put your money in there for a very, very long period of time, and everything is going to be okay. They're in a really good cash situation. They're a very reputable company. To me, this is something that diversifies my portfolio a little bit with not a lot of risk. That's why I like Brookfield Asset Management. Stock number 4, Corcept Therapeutics. Again, I'm sure a lot of you haven't heard about this one. This one I bought around $20 a share. Now, I like playing in the pharmaceutical sector. I've been doing this for a very, very long time. I have a lot of medical background in my family. I actually went to medical school for 2 years before dropping out because the healthcare system is a total disaster. But I love looking and reading different research papers. I love looking at clinical trials. I have consulting physicians that I pay when I need them. And this is why I can buy pharma. So I'm not recommending that everybody go and buy pharma, but if you do, go look at the pipeline. Something very special about these guys. They have a drug for Cushing's disease, and it is absolutely phenomenal. Everything that we are seeing that is coming out about this company, as far as their Cushing's drugs go, is outstanding. And I just want to remind you guys of one thing. I'm telling you about the stocks that I own right now. You should not buy stocks because I own a stock. You shouldn't buy one because Paul owns a stock or anybody on the internet owns a stock. You should do your own research, come up with your own thesis, and come up with your own decision to buy it. Don't just buy based on something that somebody is saying. You need to understand pipeline. You need to understand, and there's a lot of drug companies out there that sound really, really good, but the disease that they're treating or the infection that they're going after or the virus that they're going after does not drive revenue and profit. And I hate to say it that way because there are patients in situations where they're with some type of uncommon disease. But if you're, as an investor, you have to say, I need a drug that drives revenue and profit. And unfortunately, that's the world that we live in right now. The next one, Sprouts Farmers Market. This already is a 2-bagger for me. I bought this around $30 a share. Sprouts Farmers Market. Some of you may not have this in your area. We don't really have it around where we live, but I've been there before. I've been in Arizona. I go to Florida a lot. There's a lot of Sprouts Farmers Markets down there. They're really, I almost think, bougie kind of stores with a lot of health products in them. But here's the thing that I love about Sprouts Farmers Market. They took CEO Jack Sinclair. He was in the dollar space world, and they brought him in, and he is absolutely crushing this business. Here's the big thing about this company. Guys, look at this. Profit margin, 4.52%. Why do I highlight that? You're probably looking at that going, well, that sucks. Well, if you look at another company, let's look at something real quick. Kroger. This is a grocery store that we can compare it to. Look at this profit margin, 1.76%, and that's good for the grocery space. So they're coming in at about 4.5%. And guys, that is absolutely unheard of in this world. Also, their distribution centers are in ideal locations to where their stores are. So they don't have to spend all this money allocating trucks going here and trucks going there and planes going here with the food. It is an absolutely incredible business. Actually, I encourage all of you to look into this one and just go read the 10K about this company. See what Jack Sinclair has done over the past several years. Another reason that I absolutely love this company, come down here, guys. They are buying back shares. They are returning shares to shareholders like madmen, and they continue to do that. They don't pay some silly dividend. They know how to invest their capital. They know how to return capital to shareholders. Sprouts Farmers Market is the best supermarket in the game right now. The sixth stock on this list that I own is Tidewater. And again, some of you probably haven't heard of this. And you're catching this trend. I don't go after except for Google and Apple, I don't really go after a lot of sexy stuff. I go after the sexy things that make sense when I can buy them at the right time. But I'm out there looking for value. So this is Tidewater. Tidewater is a very interesting business. They're in the tanker space. Here's a couple of reasons why I love Tidewater. Number one, there are really no new builds that can happen in this vessel space. Why? Because the returns aren't there. I mean, these companies are going to have to pay monstrous amounts of money, go into serious debt before they get into anything that is even remotely close to what Tidewater is doing. Second, they are dominating the space between the United States and Africa as far as vessels going back and forth. It is, to me, they're almost creating their own little monopoly in this world. Another huge reason. This business, the vessels that they have are about $20 million. But if you wanted to go and buy in all of them, it's $60 to $65 million right now. So I look at that and saying, look at these assets that they have and look at this massive discount that I'm buying this company just based on their assets. Now, I want to tell you guys my basis on this one is about $80. So you can see this is a really recent purchase of mine. You can see that it's down a little bit, but something that I really love here, and you're not going to see it necessarily on the income statement. You see, they've been diluting. There's a lot of transactions that are happening. This number right here is going to be dropping significantly. They have a share repurchase program in there that is going into effect. Why? Because of this. Because they are buying back shares at a discount. Again, it goes back to almost what I was talking about with Apple and Google and all of these companies. They are great allocators of capital. You can see how important that is to me. So I'm actually quite happy that during that time, they were increasing their amount of shares. We don't need to buy back shares when the stock price is high. Now, we need to get aggressive and start buying back shares. They have a program in place to do that, and they are absolutely doing it. Now, you might be looking at this stock, Tidewater, and saying, where exactly did you find this? Well, it's funny you ask that question. I found this in our community. This was a stock that I found from the Everything Money community. And the great thing was, once I found it, I didn't really understand the vessel space that much. I really didn't get it. So what did I do? I went in there and talked to a lot of people. They have knowledge on it. And that is the great thing about our community. There's a vast amount of knowledge on many, many different topics. If you need pharmaceutical help, like we were talking about earlier, I could probably help you with that. Vessel help, I found people in the community. There is a little bit for everybody in there. This community is where people share ideas, they share their own research, and you may have even thought about joining the community. Now, if you go to everythingmoney.com and you see that we only have a limited number of daily spots for the community and software, the reason for that is the software, as it exists today, currently includes everything that we have to offer for retirement, real estate, and stocks. Now, as we expand, though, the current offer of everything is absolutely going to go away very soon. You may remember when we first started this, Paul had the software built for him and me to use. And when people saw Paul using it in the videos, they would say, how do we get your software? And Paul said, you know what? You can't get it. It's an expensive endeavor. But it got us thinking, how can we share this with you for a cheaper price? And we did it. So as the community has grown and as the channel has grown, it's becoming less and less about us and more how we can better serve you and the community members that use the software. Now, the good news is these changes haven't been made yet, but we're working on them every single day. So if you join today, you'll be grandfathered in for life to all the data, all the tools that we've made. You'll get all of it. You'll stay in your pricing tier forever. So if you're really serious about making better financial decisions, probably increasing your returns, but more importantly, sleeping better at night and making less irrational and emotional decisions, click the link in the description below to get access to our software before those changes get made. I'm very confident that this is going to be one of the best decisions that you've made. Now I'm going to go through these next 11 stocks a little bit quicker, and I'm going to scroll down and show you the price that I would be interested in buying all of these stocks at on our Stock Analyzer tool. And right before I do that, Paul's going to tell you what Stock Analyzer tool is.
Stock Analyzer is an incredibly powerful tool that helps investors evaluate and analyze stocks using key financial metrics, and I use it daily. Its purpose is to simplify the investment process by allowing users to make assumptions about a company's future performance, such as revenue growth, profit margins, free cash flow, and price-to-earnings ratios. It analyzes data based on investors' expectations and desired returns.
Now, Starbucks is currently at $95. I am interested in them probably around $85 a share. $86.39 is the exact number. This is when I'll start getting interested in Starbucks. It doesn't have much to fall. That's the great thing about it. Now, the next one, Nike. Nike is $88 a share right now. Looking at this, I mean, guys, this is Nike. I'm wearing a lot of Nike products right now. Nike shoes, Nike socks, etc. I'm looking at Nike again around $80 a share. You can see we're pretty close to that, around $87 to $90 wherever it was sitting today. It is a really, really great brand that I would like to own for a very long time. Now, the next one, Visa. Everybody has a Visa in their pocket. I have multiple Visas in my pocket. It's about $270 a share right now. This is a company that I would pay a premium for. And honestly, look at this. Based on my assumptions up top, I am in the range of possibly buying Visa. So while we're at this, I'm just going to throw this on my watch list real quick. I'm actually going to put in 270 so I get alerted tomorrow. And then I'm going to go do a little bit deeper dive on this thing. Visa is a very interesting company to me. Now, similar to Visa, MasterCard. I really like MasterCard. I really like Visa. I think they're neck and neck with each other. It's about $490 a share. And you can see I'm a little more off on this one. $317 a share. Who doesn't have a MasterCard in their pocket? Actually, I take that back. I do not have a MasterCard in my pocket. But I know that MasterCard does everything. I know they're very, very close with Major League Baseball. Next company, Ferrari. This company I love because they control their own destiny. They only make a certain number of cars per year. If they need to generate more revenue, what are they going to do? They're going to increase the number of cars that they make per year. If they want to go and be more exclusive, bring down the number of cars that they make per year. That's why I love Ferrari. It's $474 a share right now. Oh, it's so far away from me. $162 a share based on a multiple of earnings. It has a lot to fall, but again, I might go and look at this and say, what's the premium I can really pay for this? I don't think I would pay more than $300 a share for it. But remember, guys, just because a stock is high doesn't mean that it can't come way back down. That's something very important to remember here. Next one is Louis Vuitton. Louis Vuitton, they own so many brands that you don't even know about. Again, I really like the exclusivity of it, just like we saw with Ferrari. Coming down here, it's another one I might need to pay attention to. $714, current price, $691. So I'm going to take a look at this thing, maybe get interested in it of late. But here's the thing. When something hits for me, I need to say, all right, am I going to go buy this right now, or this is when I start digging deeper. Just because a price hits for me, things could have changed. I could have thrown this on here a year ago. Things could have totally changed in the Louis Vuitton brand. I'm going to go and put this on my watch list for $690 so I can see it tomorrow morning. Now, before I move on, Louis Vuitton does have a couple of different tickers on the OTC exchange. So I want to show you this one is $137.76. Now, if I scroll down, I put the exact same assumptions in there. You can see that the return is basically the same. It's all relative. About $143 a share. I'm still going to look at this tomorrow for that same reason. Now, the next stock, Hermes. Hermes is another very, very exclusive brand, and you can tell that there's a theme coming here. I really like the exclusivity of brands because they control their own pricing power. Now, for Hermes, it's about $2,000 a share, and it's a little bit rich for me right now. It's in euros. 1,300 is what I'm looking at. I'm not buying that now for a little 5% return. I'm just going to wait. Guys, just because the luxury brands have been booming in the past several years because people have been flushed with cash. They are going to pull back. Just because something is up doesn't mean that it is up forever. Another great brand, Costco, about $908 a share. I just passed a Costco today. This one for me is, to me, could be the stock that I actually never get to own if I'm looking at this list and being honest with myself. It is about $900 right now. $350 is my price. This thing used to be in the 200s. Now it's $350. I think this number is going to keep coming up because remember, as value gets better, my price continues to climb, but this price could also continue to climb. So Costco is a company that I really want to own forever. Charlie Munger and his family's estate own it. He said that they have the best ethos of any company out there. That is probably true. Actually, I saw a stat today. There are more hot dogs consumed every year at Costco than every single Major League Baseball stadium combined throughout the season. Isn't that crazy? And they're never changing those hot dog and a Coke prices. Home Depot is the next one. It's about $400 a share right now. I love Home Depot. I go there often. I was actually just there today before I came and recorded this video. $277 a share is multiple of earnings. It's about $395. This is going to come back down. They are returning back to their pre-COVID levels. They had a massive, massive spike because everybody was at home. Everybody was flushed with cash. What are you going to do? Remodel your house, do DIY projects. Those numbers, those revenue numbers, those profit numbers are coming back to life. And my value with the current price of the stock is going like this over time. So I'm excited to own Home Depot at some point. Restoration Hardware, another great brand. It's a luxury brand. They have these stores everywhere with restaurants all over them. We just got one in Cleveland. I just got a lot of Restoration Hardware furniture. This stuff is fantastic. Their service is amazing. They came to my house the other day, dropped off some furniture, oil spilled on the driveway from their truck. I wrote a report. They said, hey, how was the thing? I said, you dropped oil on my truck. I got 3 calls within 5 minutes from different people at the company saying, we're going to come out and fix it for you. I was bombarded with calls. It was absolutely wild. That's the type of luxury brand that I like to see. They just earned a customer for life. $336 a share. I'm looking at this about 140. Now, I could probably increase these numbers a little bit, but the furniture business is just so saturated. Yes, it's luxury. I'll pay a little bit of a premium, but not much. This needs to basically fall in half. I bet if it falls in half, I'll get interested in it. And again, luxury item. If we hit any type of recession, this is one of the companies that will fall. And next one, Microsoft. $430 a share. Who doesn't want to own Microsoft? I'm really not that far off. Guys, think about it this way. What are the stocks that have led this market to these ridiculous highs that we're at? Well, Microsoft is one of those leaders over the last decade. So as this has gotten way up here to some crazy number, it's going to be the one that falls really, really fast. I do not think that $330 a share is far away from Microsoft's price right now. Now, if you guys want to see Paul and I do a full stock analysis, click this video right here. It'll give you a full understanding of how we go about analyzing a company.